All right, a very good morning, ladies and gentlemen. Well, I would like to invite all our members of the audience outside in the pre-function area to join us right here at track 3 of the Bharat Fintech Summit 2025. We're kickstarting the day with a very special segment, a masterclass on secured lending. So I would urge all our members of the audience outside in the pre-function area to please join us right here at track 3 of Bharat Fintech Summit 2025. It's here where we begin a masterclass on secured lending. We're kicking off the day with an insightful masterclass, like I mentioned, on secured lending, as we all know that lending has been a crucial pillar of financial growth, and securing these transactions is more important than ever. And we have a very special speaker who will be joining us to lead the session on secured lending. So I would urge everyone outside to please join us. It's time we kick off with the first segment of the day. And just like that, I mentioned we're kicking off the day with an insightful masterclass on secured lending. And joining us on stage, we have with us Mr. Shashank Shekhar, co-founder and head of consulting at the Digital Fifth. He will share key strategies and best practices for secured lending in today's dynamic landscape. We're kicking off the day with a masterclass right here. Can we please put our hands together for Mr. Shashank Shekhar, everyone? Over to you, sir.
Yeah, good morning, everyone. Morning. Is it working? Yeah, thank you. And let's just start the day with some learning. I don't know what I'm going to teach you, but we'll get started. And thank you for joining us on the Bharat Fintech Summit 2025. So we know that I think we all have experienced that lots of the things has happened in the unsecured lending side of it. Like many of the people can get the personal loan within a seconds kind of thing. Or in the MSME also can get a loan in just a couple of days kind of thing. But same thing has not happened in the secured lending if you look at it. Secured lending is one area where that still has been marred by the manual intervention. I think some of you might have applied for the home loans and you would have experienced that it takes a couple of days couple of weeks of the time. So that's why we are going to take a dig into that, how the secure lending is evolving or what the future lies for the secure lending. So thank you for joining me. So we are going to cover a few things, and I think this session will be till there the chief guest joins in. As soon as the chief guest will be there, then primarily we'll take a pause of the session. We'll talk about some of the challenges, how the digital journey is getting envisaged in the next couple of coming of years in the secure lending. And the future of the lending, we'll just talk about it. So let's get started into that topic. So when you talk about the secure lending, there are multiple products, right? Secure lending, what the definition comes that bank or the financial institution giving a loan, giving a loan against some kind of the collaterals, like you hypothecate certain assets, be it on the gold, be it on the property, with the financial institution, and against that you get a loan, right? It's a kind of act as a security to the financial institutions. So it could be either the home loans or it could be auto loans, gold, loan against properties like you have in a house or you have in a shop against which that you want to go to the financial institution and try to get in a loan from it. And the loan against security is also like be it you have some stocks or be it you have a mutual fund that you can just go and ask a loan against those property, right? I'll not go into the basic, but these are the, so primary session will focus on the home loan side of the security, not getting into the gold loan and other kind of products, right? So if you look at it, there are multiple products like be it on the state home loan, you're buying in a residential property, you get in a loan, or it could be commercial property, construction, many other tier 2, tier 3 cities, you may not experience in the Bombay kind of the city, but people buy a plot and build in a home, right? So that's where the home construction, or it could be the residential property, top-ups, improvement, balance transfer. So these are some of the loan product you will have. Now let's look at that, some dig into the unsecured lending to see a context of the secured lending where the challenges lies, right? So if we talk about the personal loan, I think most of the places, especially to certain segments like salaried class, you may be able to get the 6 to 10 minutes of the loan, right? Including all the formalities of the KYC, underwriting and everything that you get it done. And cost of acquisition may also come down because now many of the platforms, if you look at it, you will find that platforms has that offers pre-personal, like if you have money control app or many other apps that you will find, you will have that loan offer. So customer acquisition cost coming down, manual intervention mostly likely to be completely zero, be it on the KYC or the documentation collection for your assets and all. Same thing is started transitioning in the business loan side. That is still only to a certain segment of MSME or shops, which may have the certain proper documentations, right? So be it on the merchant cash advance against that QR code transaction that customer is doing. But there also you can see that the days, number of days or the processing has started coming down drastically, right? And why it has changed? Because that it's more profitable for the bank, customer demands is there, government is pushing for MSME. So these are the factors has been driving, right? And what has contributed to hold that kind of this digitization of end-to-end journey for these unsecured loan, be it on that entire account statement analysis or the government stacks from the Aadhaar, NPCI, e-sign, MSME side like Udyam certification is there, you have the e-invoicing, lots of the technology infrastructure has been put in place which allows that any financial institution to plug in and get that process done in the short time. But when it comes to the secured lending, the scenario is completely different, right? It dramatically changes because there is a physical things attached to the whole of the process, right? And that's where the complication start. If you look at the average, you will have any good bank, even the large banks, NBFC may find that at least you will take 3 to 6 weeks of the time to get in a home loan process, right? That's the kind of things. Cost of acquisition goes very high. Average, we are working with the banks, one RM able to only process 2 loans application in a month. So you'll have to add his salary because not that he is not able to reach out. He is able to reach out to the customer, but kind of the time and effort that he has to put to get one customer process done, right? Because lots of the documentation, follow-up and all this thing has to be done. Cost of loan, again, there are so many people involved in the whole of the process, from the sales guy, the DSAs. Largely, if you look at it in India, 60 to 70% home loans for any financial institution, be it on a bank or NBFC, get processed with the help of the DSA, direct selling agent partners which are there, right? So that's that there, then sales guys are there, then credit analysts who will go and perform the personal discussion with the customer. There will be a guy who will go and visit to verify the risk part of the property, the individuals, then you will have the underwriter, then you will have the lawyer, you will have the technical who will go and check that valuation part of it. So many people are involved into the whole of the process, right? Multiple, not like in a personal loan that you go to the app and everything get processed. So that's primarily put the cost of processing very high. Productivity in the home loan, because there is so much of documentation is involved. I was working with one of the bank, and I could figure it out that almost customer has to do an average of 50 to 60 signatures during the entire process of the home loan processing. So that's kind of the duplication of work. Lots of the multiple time of the data entry is being done. Multiple forms, like say, for example, you have to get the risk containment unit done, you have to fraud checks, you have to lawyer, you have to send the detail. Many of the details are filled up again and again and again. So these are the typical challenges. And cumbersome process with multiple touch points I already spoken about, right? Some of the challenges I'll come and talk about it. So if you look at it in the unsecured loan, typically you try to verify the KYC part of it. The purpose remains there, that purpose for the loan has to be there, right? But challenges happen when underwriting also in unsecured. If you look at it, certain of the documentation like bank statement or bureau details you have pulled up, it's get done. But secured lending is not like that. You'll have to generate the lead document collections, like customer property document, all the details has to be captured, credit underwriting, legal and valuation, which is a critical part of the whole of the secured lending process. This is where the challenges also comes. Like you need to go and check the title search for that individual who is claiming to holding the property against which he is trying to take a loan, right? And not only that, you have to check for the title at this moment, you have to also check the chain of the titles which has transitions over a period of time. I think it's 13 years that you have to go back in the history and check those titles, that somebody should not come back and claim that this property belongs to me and how did you able to give a loan to that individuals, right? The title checks has to be done, and the important is the valuation. Let's say if I am putting in a 1 million, like 1 crore of property, and I need to take a loan of, say, for example, that will get decided based on that what is the value of the property, because it's collateralized. It will act as a security to the lender. So getting the right valuation for any property becomes very critical. Then there are charge creation and innovation. Charge creation is a process when you have applied for the loan, you have got the sanction, you have to go back to the registrar office and put the charge creation that this property has been mortgages to the bank. So these are the typical processes where that banks takes that, or customer also, sometimes he has to go and do that, right? And the last not the least, that insurance has to be taken, disbursal has to be done, and then servicing. So I already spoken about a few of the challenges if you try to look at it. Home loan is a complex process, right? At least we have seen that. And banks and NBFCs also continuously get troubled with the regular turnover, right? And turnover, attrition challenges, right? Now, typically, if you go to the north, you will have a different process of the legal and valuations, right? If you go to the south, there will be a slightly different process. Now, the banks, when they are taking the employees from each other banks, the sales guys try to follow the process that he has been following. So these are the typical complications start coming, like when we were working with the bank, we could see the difference between process followed in the Maharashtra, Tamil Nadu, and the Delhi, right? There could be always a delta variations keeps on coming, lack of standardization, right? And many other times that other cities, they are not able to figure it out what are what is the exact process that need to be followed. So whatever process that the sales guy has learned from the previous organization, he's trying to replicate the same process at the organizations. Fragmented process, unclear communication, slow and inefficient process, because mortgage, like everything, the property details has to move from one place to other, and that's typically create the challenges. And if it's for the individual, it's relatively easy. Individual buying a flat in Mumbai, these are like good scenarios. But tier 3 cities or tier 4 cities, what is a shopkeeper trying to buy a flat, buy a loan against the kacha pakka makan that he has got. Just imagine, these are the kind of the variation that you will have. So one place is still you may have some kind of normalization, but other places it's become more complex. Customer always has the trust issues, that what are going to happen to my property and all these things. And it has also lots of the fraud element linked to that, right? Property against that he has taken multiple loans, or property is not against him, somebody is already putting a claim to the property. So these are the typical issues remain there. He might be claiming that this property belongs to me, but it may not be, right? These are the typical fraud issues will there. Recovery process is challenge, and the cost of compliance will always be there, right? So I think we have already spoken about that, why that this required, right? I think as the customers today is getting used to the quick things, right? We are also used to the things moving pretty fast, right? Be it on the financial services, be it on the payments, or be it on anything. The same expectation also started coming into when he is trying to buy in a home loans. And many times he is in hurry because he has got the right deal and he needs to close the loan very quickly, and that's where typically the struggle will start. So customer expectation changing, digital platforms is now available. Customer look for the hassle-free journey. There is continued digital adoption. We have the digital public infrastructure in the country that definitely that allows you to at least take an advantage of it and try to see that you can replicate into the secure lending piece. And the technology innovations we are seeing, and which we'll see as we going forward, we'll see that things can start helping into the secure lending part also. So I've spoken about, so what I have done, that I've just broken down all the processes which goes into sequential manner for the secured lending. And then what we'll do that, we'll start seeing that what's happening in each of the steps, which primarily start helping you to plan for your digitization of the home loan journeys, right? So if you look at the customer onboarding and application, I think that's where that lots of the things have happened, and today's banks and NBFCs, be it on the secure lending also, they have started making adoption of, be it on the authentication. Face authentication is already released by the UIDA, right? So you don't need to primarily go and meet the customer to do a proper KYC. You can, if individual is there, and then you can do the face authentication with the Aadhaar, that can be done, right? Signatures has been, so typically as I was talking about that, in a normal home loan process, 50 to 60 manual signatures has to be done. Now you can get rid of all the manual signature, you can take advantage of the e-sign, right? And there are players already available in the market, and these names are just for the representation purpose, that we may not have that anything to do, but so primarily it helps you with the faster customer onboarding, better compliance, regulatory compliance that you can choose, and all the cost operation paperless, right? So for example, today you take, I'm sure many of you would have seen that home loan application form. It will be quite cumbersome form, right? So now you can simplify the whole of the process and then make it paperless. I think this is again, new technology is available. You just need to start plugging into the whole of the process that OCR or the data extraction from the multiple places, and that those are the things you can start getting into the documentation collections. Even your, like some of this property documentation, you can just scan through and then you can get the details. You can start comparing the details from KYC documentation, property, the bank documentation. Those are the things can be start getting done. So you have some of the players, and typically data accuracy and all these things. As I was talking about, like why the data entry also has a challenge, the duplication of effort, because the DSA fills certain information, sales guys go in and get certain information. When he goes back to the backend for the credit team, then you will find that lots of the data mismatch is coming in place. So typically all the documentation verification, if that AI usage can be done, and we are now living in the ChatGPT era, OpenAI era, right? So where that AI has started playing lots of the big role, and that we see then the secured lending going forward, you will have lots of the impact. I think these are the typically risk control checks. So when anybody is applying for the home loans or the LAP, loan against properties kind of things, the certain people has, the sales guys or the risk team has to visit the customer, do the fraud verification of the property. They go and interact with the individuals that, okay, this property belongs to this person. What are the risks involved to that individual? So those are the things typically you try to look at it. So these are the risk and compliance checks can be performed through the multiple platforms are there. Like you can do the global watch list checks and all these things that you can figure it out that whether the person is blacklisted anywhere or not. You can start doing the analytics for the risk assessment, AML compliance checks. So those all things can be automated and plug into the journey itself, right? I think credit assessment, this is definitely again where the banks have started playing a big role. Well, I will not go into the process of the underwriting, but as I was talking about the scenarios of the multiple different kind of the profile of the customer, different profile of the property. Now, typically, even if that kind of the variations are there, you will see that credit teams follow the same process for all the things, be it on the salaried individual with a good corporate and then good bureau score, while other side, there is a shopkeeper in, say, cities like Patna in Bihar. He has a kacha paka makan, he may not have the good credit score, but entire the credit flow, you will find that in a straight line. So can you use the analytics to start creating a different swim lanes, where that based on the certain rules or the criteria, you decide that what path of the credit that need to be followed for that particular kind of the customer and the property, where that now AI can start playing a bigger role. So that's where that you can start looking the role of the AI. Then video PD. Why does sales guys need to go and visit the customer place and perform that personal discussion in person, and then manually taking the notes and then come back and help into creation of the CAM, credit application memo, right? Today, I think many of you may be feeling out that when you do the Google Meet or any kind of the online meeting, you have the transcript readily available after that. And these are getting really smart day by day. Many of you would have started observing that notes prepared by the Google Meets and all this thing, read.ai and all, is a pretty damn good, right? So what you can do that let the sales guys do an online PD from the sitting in the office, create a transcript, plug into that entire process of the camp preparation, right? And through the video analytics and all these things, like typically what do you try to check? Whether the customer really resides at that place. You ask the customer to take in a video of the entire property and all these things. That you can do while sitting in the office and tell the customer to do the verification, and some kind of analytics you can check that whether this is of the video of the same premises or not. Like some kind of analytics you can do that. So lots of the play that we may start seeing at this stage. And that's also is typically complex process where that 2 to 3 days goes into the whole of the performing the PD. And now comes this too tricky part of it, asset valuation, right? What do you do for asset valuation? There are technical valuer are available in the market. Banks, NBFC has tied up with them. they go and try to access that property, look at the property, where does it belongs, what are the areas are there, and then based on that, they give a report to the customer, right, to the banks. And typically this process happens only on the mail. So as soon as the sales guy has captured the application, he'll put up the mail and send it to the technical valuer. Now the challenge comes that valuer when gives the valuation report, sometimes customer may like it or may not like it. Customer feel that my property ki कीमत तो ज़्यादा है, right? And many of the scenario I have, when we are working with the banks follow two valuers, okay, and they try to get that, and this is all adding to the cost part of it. So asset valuations, now there is still a challenge that you can't have the readily available tool or infrastructure which pinpoints that, okay, property in Kandivali, that's the price, right? But now lots of the thing works has started happening by some of these guys, may not be full holistic, but velocity or the prop worth and all these things, they started creating a kind of the database, right, where that property valuations can be captured by using some of the data from these platforms, right? So that's where that banks or NBFCs are, at least started experimenting, at least not on that pan-India basis, but at least in the certain pockets. And when I was talking about the credit process of the creating the swim lanes, right, you figure it out, what rules to follow to make sure that one path of the customer, like maybe falling into the green channels, he able to get the home loans in a 5 days kind of things. Where everything is good, you able to capture that technical valuation report in instantaneously from some of these platforms, and can you get them? Various GIS-based kind of the data market trends, these guys are working. Let's hope that this gets matured a lot. 100% is going to be very difficult, at least in the near future, but I'm saying that it will work has started happening. You can start trading at least 10% of the customer if you can get it done. It improves the customer satisfaction to the larger exchange, right? Now the second challenge is on the title checks, right? So when you put up any property for the valuation, what happens that you go and give it to the lawyer, right? Technical lawyer who was there, and now he goes to the SRO office, which is a state registrar office, and there he try to check and pull out all the details that, okay, this property belongs to whom, and how the chain has been transitioned over a period of 13 years, right? So that's where that he gets all the details, create the technical report, and give it to the banks or NBFCs, right? And basis that person, banks able to take a call on that. So that's where that title checks. But now, as we keep on hearing that SROs are getting digitized, lots of the records of the individuals are getting digitized. Only the challenge happens into the finding the title search for the so many back years, right, of 13. So that's where the challenge typically happens, and that's where that you have to go. But slowly, I think, and the data is still not being available through the APIs, which can be directly plugged into your entire digital journeys. So that's where that you can start using some of this platform like Matram, Teal, Advaris, and typically how they operate that, do they have the database? Yes. They have created a database of the certain properties with the title checks and all these things. But also they have pool of the lawyers and all these things, which combination of the data available with them and using the lawyers, they try to fast track the title details and then give it to them. Okay. So I think these can be plugged in. Yes, again, I'm going back to the same my principle that you may not be able to apply this all the tools and technologies for the 100% of your loan application and customers, but at least you can create a kind of a swim lanes where that certain rules, including the title checks and the asset valuation, can plugged into the process, and then at least 10 to 20% of the customer you can digitize the end-to-end journey. And during the session, also we are going to release a report on the secured lending in partnership with Amicus. I think this will be going to at 11 o'clock, and please visit in the same track 3 where that you can go and experience that whatever the reports talk about. These are the typically details that we are trying to go into the reports. It will be a good handy to you to get in deep insight into the secure lending. I think, so once you have completed the process, the entire loan approval and disbursement, be from the creating of the CAM reports and all these things that you can completely decide and move into the process. Then loan tracking and servicing, lots of the collection platforms and all these things, which is again AI-based, which allows you to get the deeper information on the collection process and all these things help you to track that loan applications, right? So these are the typically we have seen. I think most of the things I've already spoken into that whole of the process, but let's look at the key trends and market innovations. So I think most of the banks today or NBFCs are trying to look at that their secured lending journey. They know that what need to be done into the unsecured, be it on the personal loan, unsecured business loan. But now everybody's, at least most of the banks are trying to attempt that, relook their secured lending process and look at that if you can revamp. Standardizing the process across the region. As I was talking about that, for the same bank and the multiple different states, because state property registration process at the states also is a differs, right? So that's why the processes of the home loan also differs from the states to state. So banks are trying to work it out that how do they streamline the processes. Secure lending digital platforms. So typically platforms are, LOS are there, but LOS are typically designed to follow the certain path, right? But now LOS also may start getting the loss of the AI component built into the process, that how it can handle the multiple swim lanes. So if that customer comes into this kind of category, the entire loan journey within the loan origination system follow that certain path. Because that's where the challenge start happening, that if the LOS is not able to handle all kinds of the scenarios, you start getting back to the manual process. Now the combination of manual and the digital start creating a challenge, and it's all take the time, right? So LOS will start working it out that how based on the risk, based on the certain grid, that entire the flows can be plugged into the process. I think bank fintech partnership for the technical and legal, we have seen some of the examples. So most of the banks, NBFCs are trying to partner with them, trying to experiment, trying to learn through the process that how it is working, that partnership with, be it on the technical like Matram or say for example Velocity kind of the players, and trying to learn through the process. I think lots of focus is again coming on the TAT and the customer UX. Explain part of it. I think I've already spoken about that partnership with the valuation fintechs and all these things. Improve upon the overall, partner with the legal fintechs, also property KYC, workflow and all these things, standardized reports and all these things can be done, right? So these are the things has been done. So what we see that what all it's putting the process and plugging into some of the technologies, what does it helps into that? Look at the dramatic transitions. And I'm again reiterating that it may not be for 100% of your own loan application or 100% for the customers, right? But at least even if you are able to achieve for 10 to 25% of the customers, it will be a dramatic change to your cost, to customer satisfaction. So by plugging in all the methods, your turnaround time can come down to 2 days. You may be able to get the sanction. I think some of the NBFCs have able to get the sanction letter done in a quick time. So because this sanction letter getting also takes like at least 2 to 3 weeks of time. So that can come down to 1 to 2 days, and at 3 to 7 days completely dispersal, right? Cost of acquisition can come down because you will start minimizing your visit to the technical valuer, the lawyers, multiple risk checks, the fraud checks. Those all the things you will start cutting down. So that will start leading to your cost of acquisition. And moment you start giving the loss of the time breather to your sales guys into a complex process of the multiple signatures. Even I've seen that sales guy has to run to the customer at the time of dispersal to take a couple of more signatures, right? So if those processes have been cut down from his operational work, he has a loss of time to sell. So definitely his productivity improves upon it. I think cost of loan may not have dramatically improvement, but definitely it will see a loss of the improvement. I think lots of the duplication of work that we'll try to bring it down, because like one single form, like customer name, address, details, and all these things, customer has to fill on the 4 or 5 papers, right? So that's where it will come down, increase the productivity and customer experience, like that can be done, right? What we do, Masterclass है तो थोड़ा बेचना भी पड़ेगा, okay? So that's why that we work a lot with the banks and NBFCs, primarily helping into redesign of their journeys. We help them to do the benchmark against that industry peers. We has created a kind of a data matrix and all these things based on that experience of working with the other banks. And you can do benchmarking, help you to the partner identification, right partner which can plug in, entire redesign of the LOS journeys, and then help you to the implementation. So these are the where primarily we work. I think benefits we have already spoken about. So I'll not repeat again and again. So, Vanshika, I'm through with it. So, okay. So, thank you guys. Primarily, I'll hand over to, sorry, I missed out your name. Priya. Yeah, thanks.